Gadang Holdings Berhad has received a 327.9 million ringgit contract from TRX City Sdn Bhd for traffic dispersion and improvement works around the Tun Razak exchange. The contract was awarded to the consortium of Gadang and China Railway First Group Co Limited's unit CRFG Malaysia Berhad and will span 2 years. Work will cover earthworks, foundation works, underground reinforced concrete road structure, elevated roadway and at-grade roadway, as well as works for access roads. Once completed, TRX will be linked up to 3 major highways, namely Smart, the Max and Duke 3. Gadang expects this contract to contribute positively to earnings. While TRX's CEO Dato' Azma Talib said that the work outlined in this contract will realise the TRX master plan of turning the development into the best connected address in KL. Is Bandar Malaysia's new suitor waiting in the wings? According to a report by the Straits Times, the Talian Wanda Group has emerged as the frontrunner to be the master developer of the Mammoth project. The report alleges that negotiations have reached an advanced stage and is just waiting approval from China's financial regulators. If all goes to plan, the agreement would be signed by PM Datuk Sri Najib Razak during a trip to Beijing this week to attend the Belt and Road Forum for International Cooperation. Wanda is headed by billionaire Wang Jianlin and owns the world's largest cinema chain along with theme parks, football clubs and hotels. Quoting Malaysian government officials, the Straits Times report said that the new deal could be substantially higher than the previous 12.3 billion ringgit price tag. Glove maker Hartalega Holdings Berhad saw its fourth quarter net profit spike by 45.3% due to better sales and more efficient ops. Net profit for the quarter came in at 89.4 million compared with 61.6 million a year ago, while revenue similarly went up by 31.6% to 527 million compared with 400.5 million last year. For its full year report card, net profit was almost 10% up at 283 million on the back of 1.8 billion in revenue, which was 21.6% higher than the previous year. The group also declared a third single-tier interim dividend of 2 cents per share. Hartalega's MD Kwan Mung Leong said that the solid numbers were proof positive that its strategies had put it on the right path to maintain its pole position. Going forward, growth will be driven by its next-generation integrated manufacturing complex, or NGC. According to Kwan, Hartalega has embarked on Phase 2 of NGC with 10 out of 12 lines at Plant 3 operational. The remaining lines at Plant 3 and 4 of Phase 2 are expected to be operational by end 2017. Equity National Berhad claims that it is not late to the party in reducing its huge exposure to oil and gas, explaining that it had started doing so when the sector was at its peak. CEO Syed Yasir Arafat Syed Abdul Karim points out that the PE firm had crystallised part of its investment in Icon Offshore Berhad during the industry peak. He added that since then oil prices have weakened. Hence, the opportunity to crystallise needs to be carefully considered, and that ultimately Equinas's goal is to maximise value in all the companies it has invested in. Equinas's portfolio leans heavily towards the ONG sector, with 41% of its 3 billion worth of investments in that segment. It should be noted that last week, Equinas had cancelled its plans to dispose of stakes in its oil and gas assets, namely Icon and Orkim Sdn Bhd, to UMW Oil and Gas Corp Berhad, saying that the exercise required much more significant capital than was initially expected. The International Monetary Fund is expecting Malaysia's economy to grow 4.5% in 2017 before inching up to 4.7% in 2018. According to IMF's Regional Economic Outlook Asia and Pacific report, domestic demand will remain the main driver of growth as exports gradually improve, explaining that the improvements in the labour market and the 2017 fiscal measures will support private consumption, while higher inflation, high household debt and macroprudential policy settings could hold consumption back. As headwinds continue to buffet the economy, Bank Negara is expecting the country's GDP in 2017 to grow between 4.3% and 4.8%.